XRP's charts and metrics paint a compelling picture. Technical breakout. Heavy institutional interest and healthy derivatives activity are aligning to push the price higher. A recent Cointelegraph analysis notes that analysts say XRP's price could continue its uptrend to $3.12 and later to $4.50. In fact, XRP has just broken out of a long-established multi-month symmetrical triangle, with a daily close above $2.95 confirming the move. This pattern, marked by converging trend lines between roughly $2.80 on the bottom and $3 on top, has served as an accumulation zone. Support in this range, $2.77, $2.80, has already been tested several times, aligning with a key 78.6% Fibonacci retracement level. If that golden retrace holds, bulls argue it signals the correction phase may be over and a powerful rally underway. On the upside, a clear break above resistance into the $3.10 region would reignite momentum. As Cointelegraph reports, analysts see immediate targets of $3.08 and $3.27 once $3 is cleared, with Fibonacci extensions still pointing toward $4.50 as the next major inflection. Momentum indicators support this bullish scenario. The RSI has surged from the mid-30s to the mid-50s over the last week, reflecting fresh buying strength. Similarly, XRP has climbed above key moving averages. Notably, the 20-day EMA on the daily chart has been decisively taken out. This bullish cross over a golden cross, where a short-term EMA beats a longer-term EMA, confirms buyers are in control and that the chart is primed for continuation. TradingView data shows the 20-day EMA now underpins the price around $2.91, acting as dynamic support. In classic fashion, breaking above that level flips a bearish structure into a bullish one. That said, the bulls do face risk. A failure here could snap $2.90 support and drag XRP down toward the mid-$2s. Indeed, technical analysts warn that dropping below roughly $2.75 would invalidate the triangle, risking a retest of $2.65, $2.48, roughly the 50 to 61.8% Fibonacci zone. In other words, while a sustained rally to $4.50 is plausible if these technical hurdles clear, a break back below the $2.70, $2.80 range could spark a sharp pullback toward the low $2s or worse. A second bullish catalyst is surging institutional demand, especially in anticipation of crypto ETFs. CoinShares data via Cointelegraph shows that XRP investment products have been hoovering up cash recently. For the week ended early September, XRP ETPs saw $14.7 million in net inflows. Even as Ethereum funds suffered $912 million of outflows, this stark rotation shifting away from ETH into alts like XRP and Solana hints at growing fund interest in Ripple's token. Year-to-date inflows into XRP products now exceed $1.20, $1.4 billion, underscoring that institutions are quietly accumulating. ETF speculation is amplifying this effect. 16 spot. XRP ETF applications have been filed by industry heavyweights, think Grayscale, Bitwise, to OneShares, WisdomTree, others, with market models putting approval odds at roughly 75 to 87% by fall 2025. Even BlackRock, the world's largest asset manager, has jumped into the Ripple ecosystem. Its digital asset director will speak at Ripple's Swell 2025 conference, which has fueled rumors of an eventual XRP ETF. Granted, BlackRock has publicly held off on an XRP fund to date, but its attendance at industry events keeps hopes alive. Analysts note that U.S. approval of XRP ETFs could unleash billions in inflows. Bitcoin ETFs have already taken in over $118 billion this year, giving XRP a secular tailwind. In short, major fund managers are lining up, treating XRP as the next candidate for institutional-grade exposure. That institutional pipeline from CoinShares data to ETF filings is one of the key reasons bulls believe a run toward $4 to $5 is next. The third factor is the derivatives market, which is currently reinforcing the bullish case. Open interest on XRP futures as tracked by CoinGlass is back at record highs, roughly $8.3 billion open, and has jumped about 11% in the past week, 4% in the last 24 hours. Rising OI in a rising market means traders are adding leveraged longs. Bullish conviction is growing. At the same time, perpetual futures funding rates have stayed positive since early August. In plain terms, longs are willingly paying shorts, indicating that more traders want to bet on price up than down. This positive funding environment, an increasing funding rate over the past 10 days, tends to give bulls an edge by making it costly to hold short positions. It also suggests leverage is supporting the trend rather than acting like a pressure cooker. CryptoQuant's metrics confirm that leverage and whale activity have normalized after recent volatility. The estimated leverage ratio, which divides total open interest by exchange reserves, has climbed back to a more bullish level. For example, Binance's XRP leverage ratio hit about 0.325 this week, roughly a yearly high, marking a 6% rise in a week. In other words, traders on Binance are now using more margin again, reflecting renewed confidence after weeks of caution. This aligns with CoinGlass data showing OI spiking. Likewise, large wallets have been repositioning. On-chain studies show that whale wallets have amassed hundreds of millions of XRP around the XRP around the $3.203.30 area in recent weeks. And the net taker volume, the difference between aggressive buys versus sells, has shifted toward neutrality. In practical terms, this means buyers and sellers are balanced, a healthy sign before a potential breakout rather than one side panicking out. As one recent analysis notes, cumulative volume delta CVD on spot markets indicates buyers are slowly gaining control, while future CVD has unwound, canceling out crowded shorts. Altogether, rising OI, positive funding, and stable leverage tell us the derivatives engine is turbocharged, or at least not about to implode. As XRP challenges $3, the crypto scene has seen cases where surging funding and OI fueled blow-offs for better or worse. Here it's an argument that momentum can carry higher. A reversal would only dampen this theme if funding flipped negative or OI suddenly falls. Those gains could unwind and price could fall back under $3. Throughout this outlook, we must keep risks in mind. On the upside, $4.50 isn't guaranteed. Resistance will appear en route. Cointelegraph points out that XRP would need to clear the multi-year swing high near $3.66 in order to keep charging. That represents the last choke point before a full retest of the old $4 to $5 range. Any failure at such levels could stall the rally and encourage profit-taking. Indeed, some bullish analysts are already managing risk. For example, one trader suggests placing stops below $2.74 and smaller first targets like $3.30, $3.50 after confirmation. On the downside, if institutional flows evaporate or macro turmoil hits, even these strong on-chain setups could reverse. For instance, sudden rejection of ETF applications or another DeFi crash could send Ethereum-style fear through altcoin funds. Reversing those coin shares flows back out of XRP. Similarly, a spike in volatility could force long liquidations. If many long traders are carrying high leverage and funding suddenly turns negative, implying too many longs, it would flip into a bearish squeeze. Technically, the biggest red flag is a breakdown below $2.75. Analysts warn that such a break would likely invalidate the triangle and target far lower Fibonacci supports near $2.50 or even $2.30 in the extreme. If broader crypto markets plunge, XRP could drop 30 to 50% from here. As happened in past cycles when altcoins fell out of favor, still the balance of evidence leans bullish. First, the chart setup is ideal. Months of accumulation in a triangle have now released into a breakout that aligns with mid-$2 support holding in key EMAs crossing bullish. Second, institutional capital is flowing in. Record ETF filings and actual inflows in XRP products, mirroring the Bitcoin ETF playbook, create a powerful, fundamental tailwind. Grayscale, Bitwise, and others have been nearly tripped over themselves to be first to market. And even BlackRock's presence at Ripple events has traders dreaming of an ETF catalyst. Lastly, derivatives markets are solidly supporting the move. Open interest and funding rates are both healthy. Whales are leaning into buys, not panicked exits. In a high-stakes market breakdown style, so all three factors point to the possibility of a $4.50 rally in coming months. Of course, every bullish argument comes with counter-arguments. Should selling pressure emerge or key support fail, the setup quickly flips. But as of mid-September 2025, the odds favor the bulls. In cinematic fashion, XRP has set the stage with institutional trucks rolling in. Technical spotlights focusing on breakout levels and speculative traders piling on via futures for a dramatic upward act. If that momentum keeps building, $4.50 becomes the obvious next logical price target, not just a fantasy. Yet prudent traders will watch each trigger, holding above the $2.80 $3 range, clearing $3.15 $3.30, and finally smashing the old highs. Should those key levels break, the action may pause or reverse. For now, though, every clue from CoinShares, flows to TradingView patterns to Glassnode charts is telling the same story. The stage is set for XRP to potentially hit $4.50, as long as the script remains in the bull's favor.